Boom, we are pre-recorded today, ladies and gentlemen. We are going to be taking a look at Bitcoin, the S&P 500, and we're going to be taking a look at some of the economic relief that the Fed has planned to use as stimulus in the markets, and some of the warnings that the IMF has put out recently. Again, trying to build an overall picture of the macro perspective here is going to be important because we may find ourselves very quickly in some new type of Bretton Woods contract around the monetary system and debt unto itself. So with that in mind, let's just take a moment and dive right in. Okay, there we go. We've got Bitcoin open on the daily, and we're still following this Wyckoff distribution model. Now, for those of you guys that are wondering, I've just quickly actually had left my candles turned into single line form instead. Sometimes it's easier to watch that pattern instead of the candles, especially when you're in the time, like in particular time frames. And we're in this really nice box here. We have not been able to close above 95.30, 95.50. This would be a really nice thing to see. Closing above 9,600 on the 21 moving average on the daily would be great as well. One of the things I want to look at here is the potential for a long-term healthy bull market. And I'm going to quickly go back to our Bitstamp chart here on Binance. Bitstamp. Okay, so if we go back on the weekly here, this is something I wanted to point out, and it's something we would have gone over earlier with some of our private members. We'll just use this as a quick example. So here is the previous bull run back in 2013, 2014, a first wave up and a second big tertiary wave up as well. Now, if I actually go ahead and turn on the Arcane Bear Claw, one of the free scripts you can download from following us on TradingView, and we extend with the 200-day moving average, what we can see here is we actually, before we took off, we saw a 1, a 2, and a 3 time retest. 4 actually, if you get really close, you can see there's 4 here. So 1, 2, 3, 4 technically. Doon, 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 doon. Just like that. And this is a really nice thing to see, is the relationship between not only the 200 moving average, but more importantly on the weekly here, the 21 moving average. See here on the 21 moving average, we kept closing above it multiple times, like bang, 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 bang. I'm looking for this to be the real confirmation of if we're in a bull market. And this is where I'm going to get excited. A consistent retesting of the 21-day or 21-week moving average. So if we go back out to where we are in our time frame now and we take a look at what's been happening, that's not exactly what we see, right? We have here we closed below the 21 moving average. We have not been able to stay above it. So I'm looking for a retest of this 8,400 area, right? Whether it's right this moment or not is unimportant to me. If we stay above this 8,400 area and consistently build on top of the 21-week moving average, this is going to be my bull market indicator. This is what I'm looking for, and this is what I'm going to rely on for my long-term playbook. Until then, though, we've only seen one. Let's say this is 2, just for fun. 1, 2, 3 retests of the 200-week moving average. I suspect we should see that again. We're in a pandemic, and we should suspect a little bit of a lower initial. So hard to really speculate here, because if the Fed just keeps printing money, you kind of just want to follow the Fed. This is not a healthy market in any way, shape, or form, so trying to pretend that it is would be silly. Real price discovery is gone. Real market fundamentals have been left maybe totally out of the market since 2008. It makes it much more difficult to try to understand the fundamentals, but at least on the technicals, staying above this 21 moving average on the weekly here is going to be my we are in a bull run indicator. And that's when I'll get really excited. But for the meantime, I'm still going to play around in these waves, and I'm looking for a potential short to around 8,400. We went short earlier today at around 94.30, just holding that there, and there's a stop just above that, not too much higher, around 95.50. I don't, in case we turn around, I'd rather be sitting in Bitcoin, obviously. I like to play in the shorts, at least in my trading account. Now remember, my long-term investment account, just always keep acquiring more Bitcoin. But in the trading account, you want to be able to play in the waves, and that means looking at some of the minutia. So here we are on the daily, and then we'll actually make it back with our, I'll turn the bear claw off here so it doesn't get in the way of some of what we're looking at, and maybe we'll even turn into a single line chart. Here you can see we're stuffed right between the 50 moving average, the 21, and the 9 on the daily. And if I actually make this, let's see here, we'll change it to an area chart instead, so it's even cleaner. Here you can see we're headed back down towards the 50 moving average to test on the daily. On the 4-hour on the stochastic RSI, which is just one I happen to have open still, it's actually headed down on the moment as well. So I'll be holding that position for a little bit longer. And I'm really looking to justify this long-term Wyckoff prediction pattern. This is new to me, but as a trader and an investor, I love finding new potential phase diagrams like this for me to help understand the market sentiments. If we break below the 50 moving average, coming down to 6,000 is pretty simple to see. And on the daily here, you can see that there's a few aligning indicators. Again, if we put that bear claw back up to look at the 200 week moving average, you can see that's down, or sorry, on the daily at 8,200, and on the weekly it's down near 6 grand. Let's see, I have to zoom in a little bit. Where did my, I'm not sure why it's not showing up. Anyways, unimportant. Let's go to another chart here. You guys are gonna, there we go. So as you can see, the 200 moving average is down here around 6 grand. And there's a big gap between 3 grand and 6 grand. And we've been kind of contemplating what would it take to fill this gap. I've been hypothesizing that this is a reactionary measure of what we know as demand and supply, right? So this is a big demand and supply gap. We usually try to fill these gaps in the VPR. Now, this is one of the first assets that you can really lose, where the liquidity of the system itself can be thrown away in the garbage. So these people who had been mining Bitcoin early on lost their computers or whatever, and those Bitcoins are now essentially terminally lost forever. So there's that big gap between 6 and 3,500 at the 314 and the 200-day moving average that I would normally, in a healthy market, like to see get filled. But seeing as we've just gone over how this is not a normal, nor is it a healthy market yet, coming down to the $6,000 range seems very likely to me. But again, on the daily, what I'm really looking for here is step-by-step approval, because I'm a trader and an investor. Rather, I guess I'm an investor and a trader. I want to make sure I get the best play as possible for as long as possible. So I'm looking for a breakdown below 93.50 to a continuation down near around 8,800. And then each step after that kind of confirms itself. So what I wanted to take a look at next was the unaccountability of the U.S. Federal Reserve to the government and the people itself. So the U.S. government is now currently refusing to say which businesses received the yield of over $500 billion in coronavirus bailout loans. So U.S. taxpayers have shelled out more than $500 billion in loans to businesses under the Paycheck Protection Program, but those same taxpayers haven't yet been able to find out which companies received the money. Now, this is one of the really abstract things about the Federal Reserve that most people don't understand. It is not actually a federal government program. So it actually really has no accountability to the federal government whatsoever. It doesn't have to tell the federal government anything. Jerome Powell is not elected by the people, right? Even the chairman doesn't really have that much control over the Fed in terms of at least what they can do in market stimulus, right? So they've been going around and buying a bunch of Main Street kind of bonds lately. So, yeah, but for the other $529 billion in loans that have been paid out, there's no current plan for public accountability. So basically what happens in a lot of these countries and governments, when they take out a loan, they say, well, basically your kids will get to it, and your kids will be the ones that have to pay back the debt through the taxes that they have to pay in their jobs. And this is kind of a never-ending system that dupes people into selling their children as slave bonds to the system. That's basically how the monetary system works, because at this current moment, for every $2 in debt that we print, we get 85 cents back in productive renewal. So the system is broken. It's been broken for a while, and this is one of the reasons why we love Bitcoin. But the real big assertion here is, are we looking at such a zombie market that the only reason the S&P 500 is still currently up is because we're witnessing Fed liquidity on an unparamounted level? Now, there's a few reasons to believe that this is actually true, and there's some categories to put this under that actually makes it beneficial for emerging markets. So currently right now we're looking at the S&P 500, which is made up of some of the strongest stocks in the United States ecosystem. We're about to break above the 9-day move, or the 9-day moving average here again, and maybe continue upwards. This is really important. Now I'll use another side example here. Here we are with Tesla. Tesla, since the beginning of the year, when we were looking at them back here, whoever was, if you were there with us in Bali, you'll remember when we were looking at these, but looking at Tesla around $200, right when we smashed that window, I thought that shit was amazing. And we've seen a 227% return, much more exciting than Bitcoin, at least in terms of the return on investment in the short term. So we know that these tech companies are doing really well in the United States. And we know the United States government can just keep printing money. As they print more money, this weakens the dollar index, which is the DXY. So the DXY here is currently sitting under the 9-day moving average, and some of sitting under a lot of its major support and resistance lines here at around 98.2 to 98, 97.8 and that's 98.2 here. And on the weekly, you can see this a little bit more clearly, and you can see even more clearly on the monthly the long-term downtrend that the US dollar has had since 1960. 1980, right? So we are actually currently sitting, the dollar is around the same valuation as it was in the 80s, just a little bit stronger. So if the dollar starts to break below 92 and comes back all the way down to test here, that's actually going to give the emerging markets a lot more play with continuing in the market sector itself. So a weaker dollar actually bodes well for some types of economic trade because it brings more exports and imports easily through each of these countries. I'm suspecting that we're going to see the dollar drop, a mass amount more printing. We're going to see things like the S&P 500 to continue to go up, Tesla to continue to go up, and potentially Bitcoin to just follow that trend of liquidity in the markets. Remember that this is not in any way healthy. I believe it is a direct sign of inflation in the markets on a day-to-day basis. So looking at the VIX here as well, we've dropped down 3%, which means people are starting to find somewhat of a stability in their mind. I believe we're going to see constant spikes here in the VIX probably for the next year or two, as the truth of the nature of the pandemic has still not been understood by the masses. They really can't grasp with the fact that this is a multi-year problem, and it's not easy. It's not a hoax. It's difficult to deal with, and the evidence that we have about this thing is not all that exciting. Looks pretty bad, right? So because of that pretty bad news, we're expecting to see consistent spikes in the VIX. Now, this spike in volatility is actually often closely related to what we've seen in Bitcoin's price movement as well. So I suspect that we should keep a really close eye on the VIX and these movements if you're trading on the much shorter time frames and a trader. In terms of investment thesis, again, guys, I want you to know, I think Bitcoin has the very high likelihood of going to hundreds of thousands, if not millions of dollars. So it could also go to zero. Okay, now under that, this is what someone would call an asymmetrical bet, meaning you have limited downside, but almost unlimited upside potential. And that is a very, very important part of this trade to keep in to account, because in the long term, you always want to have exposure to Bitcoin. But whenever I see spikes like this, or I see consistent retests of the 21 moving average on the weekly, I start to play a much more systematic trader game instead of just investing on the consistent level, because it means there's long-term plays. We're going to keep a close eye on this stimulus check, but last time I wanted to take a look at this. IMF is set to slash economic forecasts and warns of a crisis unlike anything the world has seen. Well, yeah, we're in a crisis unlike anything the world has seen. And that hasn't hit Main Street yet somehow. I don't know how the average person really hasn't come to grasp with that, but hey, look, I haven't come to terms with it. It's not all that exciting. It's not all that inspiring. This is going to be a difficult decade, but hey, the amount of innovation and scientific discovery that we're going to see on the other side of this is extremely important. So here we see the IMF has set a contraction of 3% for the global economy. That is huge. That's trillions of dollars we're talking about. Right, so what the IMF is looking at right now is all the loans that they're having to make out. So it's when European countries were in their first weeks of lockdown, the IMF said global economy would suffer the worst financial crisis since the Great Depression. At the time, it was forecast a contraction by 3% in 2020. Now, despite some economies beginning to open, the fund warned that the decline could be even worse. And this is true. This is going to be much worse than the Great Depression. We are just witnessing the beginning of this. So prepare to buckle up and lock down, not like in your house, but to play ball, because these are going to be some of the most exciting times as an entrepreneur and as an investor to play in, because there are going to be so many opportunities inside of a crisis to try to help solve some of these problems. So I just want to take a look at this one last time here, and I'll give us this chart back. I am still looking for a breakdown in the retest of this $8,700 area. That would be healthy to me, especially since what we went over here on the weekly chart which would be a retest around there at least of the 21 weekly moving average, which to me signals a much healthier bull market, and a constant kind of retest over that as we continue higher would be fantastic. If we see a breakdown at 8,300 here, I do believe we're going to continue lower, maybe even as low as $3,800. But again, remember my preface now is that all the fundamentals of the market are gone. We could simply be watching Fed liquidity and absolutely everything that takes place. So it might be a good time to think just all long. Now, none of this is financial advice. This is strictly speculation, and I will do it often so that I can share with you guys in these moving picture programs what exactly I think might be happening. Now, again, all I try to do here is give you enough information so that you guys can make your own critical, well thought out decisions. We want to arm everyone to become their own good traders. This is not a hype channel. I know that if we were about to see a bull market, it could take a decade. There's no need to rush. Be consistent and make sure you can survive. And as an entrepreneur, be super excited because there are so many opportunities right around the corner. This is Teal with the Arcane Bear. Give us a thumbs up if you like this content. You know that. Smash the no button down if you don't like it. Leave a comment. Tell me about your favorite ice cream company. I have no something stupid. Tell me anything you guys would like. Share that with the comments below. Follow us on Twitter, Instagram, all that nonsense. Shout out to Nick and DigiFox, who are doing a great job. I'm really excited to help them with branding and be focusing on building an app that makes kind of mainstream adoption in the Western world a lot easier and a lot more convenient. So very excited about that product too. I will leave it at that, ladies and gentlemen. Here is my silly face one last time. I'm actually also going to, I guess I'm going to give you guys the outro because why not?